This is John Novak, the developer, Nexgen Software Services. We're going to take a few minutes and walk through our Fib2Fib oscillator. We're going to show you how divergence is created, sharp points, and help us to define trend. The T3 Fib2Fib oscillator. It's a proprietary blend of the best components of many different time-tested moving averages, oscillators, and momentum indicators. And really, this indicator helps us to define trend, strength, and setups. It helps us to define divergence patterns for entries and exits, and also very clear, sharp points at buy or sell lines. We use this indicator with our Fibonacci areas, with our trigger lines, to give us an indication on either exiting a trade or getting into a trade. The first thing that you're going to see here in this yellow circle is a sharp point with a reversal bar. And anytime you get a sharp point from either the overbought or the oversold, right, the blue line or the red line, it's a very, very powerful counter trend look that will allow you, if you're at Fibonacci support or resistance areas, or you've got high volume areas from your market flow indicator, to be able to take a short trade. Also, when the Fib2Fib oscillator, right, makes at least 2 bars below, it really sets up trending, and you can see over here in this green box, when the oscillator value is above the blue line for more than a couple bars, it just means that the market is typically trending. When the market is trending, the 75, what we call our sell line, is where the market will usually bounce to the downside. And this is the spot where, again, if we have fibs, we have trigger lines, we have high value areas, this is the spot from our 75 line on our oscillator where we're going to look for sell signals. As the market comes down, you can see it makes a strong push up. We also use, and you can see in the blue box, the 25 line, which is what we call our buy line, when the market is trending to the upside. And this is really, the area where we start looking for mid bands, moving averages, Fibonacci areas, prior high value areas in order to buy the market. Now, one of the biggest things that we use is divergence. And divergence is nothing more than a pattern where the Fib2Fib value starts at 0 and then travels up to at least the 75, can go higher, and then comes back and generates a pivot from the 25 buy line. And you'll see on your charts, it'll mark on there for you Divergence 1. There's actually 2 patterns, but we'll deal with Divergence 1 first. Very simple. Oversold up to 75, pivot from the 25, market's going up. This is one where we have kind of a combination of the 0 Fib2Fib oscillator start, and it touches the 75 sell line. And then we pull back and we make a sharp point from the oversold. Remember, we talked about how sharp points give us a real good expectation that the market's going to turn. Well, when we have this divergence pattern and a sharp point, very beneficial for calling turning points. And again, if you were at a Fibonacci support area and you saw this potential for the sharp point and divergence, really be ready for a long trade in that situation. Here's the same pattern again, and you can see there's a lot more bars in between the pattern this time, but it's an easy pattern to recognize once you get used to it. Fib2Fib oscillator starts at overbought, comes down to the 25 buy line, stops, pulls back up, and then a sharp point from the 75 sell line to create divergence and the opportunity. Again, this is an area where the divergence is printing. If you've got a high volume area from your market flow indicator and you see the divergence, or if you get the divergence and then get a pullback to a high volume area, usually a really good opportunity for trading setups. Now you can see this is one, it's just an exception. We start at the 0 on our Fib2Fib oscillator, And yes, it can go higher than the 75 sell line. So even though we went past 75 and back to the 25, it's still a good divergence potential. And as long as we don't make anything more than one bar down at the zero, and we end up making a sharp point here, we can still have that divergence pattern. So it's a little bit bigger swing, but you can see the sharp point and divergence, really good opportunity for counter trend trading. Now, the second divergence pattern that we have written into the oscillator is what we call Divergence 2. And it's a very simple pattern. It's the same every single time. Fib2Fib starts at 0, only goes down to 50. If it goes down to 25, then you're going to get a divergence number 1. So, the other portion of this, not only do you get your pivot at 75, but we have to have close within a couple ticks of a double top. So it can go a couple ticks past, a couple ticks short of a double top. But this pattern we're looking at, and it's especially true around Fibonacci support or resistance areas, when we're looking for counter trend trades and we get this divergence number 2 to plot, this little bar that pulls back that has the tail on it, this is where your high volume area short's going to be from. So you're going to see how the divergence patterns will work right into what we do with fibs and trigger lines and high volume areas. Same thing down here at the bottom. Pattern's just in reverse. It goes from oversold up to the 50, pulls back to the 25 buy line, double bottom in price, and we get divergence. And that's really all that you need to know with the Fib2Fib oscillator. Watch for sharp points. Watch for these divergence patterns at key areas in your trigger lines. And it's really going to help you add some structure to the market and give you some additional trading opportunities.